Today, this is Attila Kovács from GTC.news Daily Trade with the facts in 2018, February the 6th. For all the alarming headlines, this isn't a true correction. A correction is defined as a 10% drop from the prior market peak. It may seem hard to remember now, but the Dow was sitting at an all-time high on January the 26th, just over a week ago. At the moment, the Dow is down 8.5% from that record level, so it's close to a correction, but not there yet. This is the time when the market separates the serious investors from the opportunists. Continuing their recent fall, equities were lower yesterday. The bear market is the aftermath of the sudden acceleration in bond yields, which increases companies' borrowing costs while it could impact inflation and shows signs of tightening aggressive policies. Canada is willing to walk away from NAFTA if the US proposes a bad deal and will not be pushed around, as Prime Minister Trudeau said yesterday, while he is still willing to negotiate in good faith. Markets in Germany are in the red after Chancellor Angela Merkel's coalition efforts failed on last Sunday. Amid fears of running up huge losses, Lloyds is barring its credit card customers from buying Bitcoin and other cryptocurrencies. It follows similar moves by American rivals JP Morgan, the Bank of America and Citigroup, which all announced similar bans on crypto purchases via credit cards earlier. Competition is heating up among the two of the biggest music streaming services, the Spotify and the Apple Music. So far, Apple has been adding 5% to its American subscriber base, while Spotify managed only 2% each month. Assuming that this trend continues, Apple would overtake Spotify in the world's biggest music market by this summer. Broadcom is ready for a new $120 billion offer for Qualcomm, trying to put more pressure on its US rival to sit for negotiations. The offer would value the semiconductor company at $80 to $82 per share, while the bid comes before Qualcomm's shareholder meeting on 6th of March, when Broadcom will pursue to replace Qualcomm's board of directors. Bayer has offered a deal to ease European Union antitrust concerns about its $63.5 billion bid for the American Monsanto, while the European Commission is extending its investigation of the deal to April the 5th. Bayer already struck a deal with BASF last October for 5.9 billion euros and is prepared to do more to gain European Union approval. Daimler-Mercedes, the world's numero uno premium cars maker, and the Bosch, who is the world's #1 automotive supplier, will begin testing driverless vehicles in the coming month. Apart from highly autonomous Level 3, the partners will also bring fully autonomous Level 4 and 5 vehicles to the streets in the near future. Although it's still studying the matter, Boeing may express interest in a fighter jet competition in Canada, despite a recent trade now with Bombardier. The new contract would be for 88 jets worth between $12 to $15 billion. Meanwhile, UPS has handed Boeing a lifeline order for 14 more 747-8 freighters, easing doubts over the jumbo's future. Aiming to be everywhere across the old continent within a few years, JD.com plans to challenge Amazon in Europe as early as 2019. The company will first launch its e-commerce platform and delivery services in France, then the UK and Germany. Unlike its domestic rival Alibaba and American giant Amazon, JD owns and runs its logistics network, which is the reason for its fast deliveries, and consumers seem to like it. Today's daily pick has the Priceline Group for you, who has some interesting earnings numbers to come. From Germany, the Porsche announced that it is ready to double its hybrid and electric vehicle investments, which will show on its stock prices. Meanwhile, the French Vodafone is still chasing after Liberty, what should be a good deal in the long term. Despite recent drops, Alibaba keeps getting higher price targets. You must see the whole world is cheap at the moment, and it brings us to Caterpillar, who is in a buy mode, but we should let the market settle first. The exchange market has moved a lot yesterday and trying to find those supportive levels which could eventually give directions to the pairs. Don't be surprised if we are going into a consolidating few sessions with a lot of bouncing around. The euro-dollar has gapped lower, turned around to fill that gap, and by day's end rolled over again. These moves happened at the 1.24 area. There is a good chance to go to 1.23 or even lower, but if you think long term, the pair eventually will break above 1.25 and aim higher. At the moment, wait for the turn to jump in. The British pounds and dollar dropped under the 1.40 level. We could go down to 1.38 before buyers will move in. If 1.40 can hold the pair, we will see plenty of bouncing between 140 and 143. It is still a buy-only market, but we must recognize that the pair must find its support first. The dollar-yen has fallen, which is not a big surprise as the stock markets gave up some percentage. 109 offers support, while 110 seems to be resistance. Given enough time, the pair will break above 110, look for supportive candles. Don't forget, our services are going to be available soon only for our subscribers. You can subscribe for half price, a discounted price, through our website GTC.news. This was Attila Kovács from GTC News Daily Trade with the facts in 2018, February the 6th.